This is always my favorite type of video to make, ladies and gentlemen. It's the Q&A video. You guys always leave some pretty interesting questions for me to answer. I pick some of them, and some of them that I think that I can answer, first of all, to a degree of which that is adequate to make a video about, and second of all, answer in a way in which it would be insightful to a lot of people watching, and perhaps they can take something from it. I've got questions today about indicators that are potentially implying the top might be in already, and my response to that. What is the difference between a breakout trader and a momentum trader? Do you think it is likely that altcoin seasons can reach the same levels they saw in 2024? My thoughts on the global M2 liquidity index and its relation to Bitcoin. My thoughts on altcoin season potentially starting in August. And further commenting on the M2 global liquidity index, specifically looking into some comments that a popular person in the space has made. So some of these questions will entice quick answers, and some of them will be more long answers, more in-depth answers. I'll give the amount of context I think is relevant and needed, and also keep in mind that I'm not going to flood you with heaps of information in a video like this, but I'll give you what I think is necessary. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all of the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. First question. Are there any indicators implying the Bitcoin top might be in already? The unsophisticated answer to that is no. And if we dive into that deeper, we have to understand what would constitute evidence of a Bitcoin macro top. Now, the most important thing I would see as constituting evidence for a Bitcoin macro top is simply, you're probably going to think I'm going to say 4-year cycle here. I'm not. Simply macro breakdown, right? If there is a macro breakdown, that is evidence of a Bitcoin top, because that is evidence that the long-term upwards trend of higher highs, right, and higher lows has flipped the downside, right, and we are significantly in bearish territory. At that point, you become highly skeptical that the bull market would continue. That would be a deviation that is beyond what we would expect from the bull market. Right? Even in 2021, even during the big drop in 2021, like the massive drop we saw here on Bitcoin, we still actually maintained the bull market upwards trend, because we actually leveled out with our lows that we formed in January before this second plateau to the upside occurred. So even during that big, what was it? It was like a 50% correction, right? We still maintained the upwards trend, right? Now, this time, luckily, we're not in a situation like in 2021 where we can go down 50% without breaking the upwards trend. All we need to do to break the upwards trend is break recent lows. But furthermore, we can even be a little bit more precise from that. And we can just say, if we go to the linear chart, that if Bitcoin breaks down from an indicator or a line like this from 2021, we're going to be highly likely to break down from 70K. And hence, at that point, we're going to be highly likely to have marked a top. And that indicator, that line, I should say, the bottom of this range is only going to be at 94,000. So at this point, there's no indicators that have been sufficient in history for Bitcoin at consistently marking Bitcoin's tops that are flashing. There are simply signs of weakness, which are flashing on the RSI, for example, which always flash in every bull market. Like, what does the RSI divergence tell us? It tells us the trend is unsustainable. We already know the trend is unsustainable. It's a macro bull market. Of course, the trend is unsustainable, right? You can't sustain macro bull markets, which is why eventually they turn into bear markets. It's not insightful. It doesn't help us at all. So right now, there's no actual concrete indicator saying the top is in. Just to drag this out a little bit more, there was, right? One of them was the 5.3 theory on Bitcoin, which everyone knows CryptoQ University publicized quite massively, which essentially took data from price cycles from bear market bottoms to bull market tops, divided that number by 5.3, and it predicted the gain in the bear market to the next bull market top, right? And that was extrapolated forward from cycle to cycle, and that was predicting a top at 83,000, and that was brutally wrong, because it completely ignored the cycle. And I said it was going to be wrong, and it was wrong. And unfortunately, a lot of people lost money trusting it, right? But that was an indicator, a trend that had historically predicted tops and seemed to line up with tops that was predicting a top at 83,000, but we crushed it with no resistance, basically. Right now, there's nothing else like that I can see, at least. What is the difference between a breakout trader and a momentum trader? Simple answer to this one. And although I consider myself a breakout trader, I think the definitions can be subjective here. I think that I would consider myself, if I'm being very specific, a mixture of breakout and momentum trader. But in theory, this is a great example here of just a simple basic line. A breakout trader relies on lines. A breakout trader relies on geometrical patterns, okay? This line here is a concrete resistance line. It's been established by that on an observational level. And for example, we could be, focusing on geometrical shapes. We could be focusing on observable horizontal support, like this level right here in pink, resistance, like the range high right here. These are the kind of things a breakout trader predominantly looks at, and they see the breakout in yellow. They recognize that as a break of the downward sloping resistance line, and they'd enter upon the breakout and look to a upper resistance zone, which they've observationally identified, and look to that level as a take profit zone. They would set their stop loss below the breakout line, and in that case, they'd still be in this trade actively. Now, the benefits of being a momentum trader, and I'm going to show you why mixing the two is probably the best idea, is that you're not necessarily relying too heavily on lines and shapes and observational patterns. You're relying more on momentum, and that is a direct reference to momentum indicators like volume, RSI, MACD, stochastic RSI, these kind of things, moving averages. So, for example, a momentum indicator might recognize, okay, we had a big drop here from this region at 103 to 96. That occurred within a spike in volume, meaning that downwards move was aggressive, and it likely dropped us to a support zone. That support zone was established within a bullish divergence. We had lower lows on the price chart and higher lows on the RSI, and so they'd probably buy down here and hold on to the trade as long as volume remains high. As volume starts to taper off, as it did right here, they'd show that the momentum, or they'd recognize the momentum is slowing down. It's probably towards the end of the move. They get out somewhere around there. Now, what I do personally, and again, the definitions are all subjective, but this is how I view it, is I use both. I use both strategies, right? I'm using lines. So I'm using this breakout line, which I identified before from over here, I believe it was, right? There it is. And I'm also using things like volume, okay, and RSI, but let's just use the volume in this case. So under my strategy, my general strategy, which is a mixture of momentum and breakout trading, I'm looking for this breakout. I'm seeing it's occurring with a volume surge. I'm potentially taking entry when that volume surge occurs. Also looking at other indicators, of course, this is just a basic example. Stop loss below the yellow line, just like a regular breakout trader. I'm recognizing almost immediately that this breakout is a dud because volume tapers off sharply and immediately returns to the pre-breakout level. That's not a good sign, especially not after 3 candles. So I'm probably exiting the trade very soon after the breakout, taking the small profit. At that point, with the extra retest, I'm able to identify there's horizontal resistance here stemming backwards from earlier here on June 12th. And for that reason, I'm looking for that level horizontally to break as the next breakout level, and potentially even looking for a structure like this, a small descending channel forming, some kind of handle forming, and perhaps entering upon a break of that, looking for a swing to that target or waiting for both to break, right? So mixing both is probably the way to go, at least in my view. Obviously, it is more complicated. It takes longer to do the analysis, which limits you on a scalp trading level. It means that you don't have time when you're scalp trading to do all this different analysis in a lot of occasions. But that's why I usually tailor my trading towards medium term kind of trades, into daily trades rather than into 15-minute trades. I think at that point you are, unless you're extremely advanced in trading, risking way more than you need to be risking. In terms of mental state, first and foremost, but also you're just taking positions that are not fully thought out. Do you think it's likely that altcoins will reach the same level we saw in December of 2024 if we get some sort of altcoin season? Yes, I do. If we get any sort of altcoin season whatsoever, which at this point is not actually a guarantee in the sense that we should have seen the start of altcoin season by now. That should have happened according to price cycles. Unfortunately, this cycle has been very different, and the reason for that, in my view, is because Bitcoin has been performing in a much less explosive manner. There's been these long sweeping consolidations on Bitcoin, which are not conducive to altcoin performance. Altcoins rely on hype and greed. I give this explanation very often, but it's true. In the last 2 cycles, we had that hype and greed. We had that swift Bitcoin performance. Bitcoin led the way, and it enabled greed to form and people to throw their money into altcoins, sell their Bitcoin, and put their money into microcaps, basically. And altcoin seasons lasted a predictable amount of time, 320 days, something like that, on both occasions, right? In 2018 and back there in 2014. At both occasions, 320, 300, whatever it was, days. This time, if that was going to occur, right? According to the cycle, according to a cyclical top of October, we were meant to see altcoin season start in November. That is when altcoin season was meant to start, because 300 and whatever odd days from there would have been the cyclical top in October, right? And we actually saw the start of altcoin season there. We saw altcoin season tease itself at November, December, and that's the period you're talking about. Now, in that even small drop there on Bitcoin dominance from 61% to 54% in a matter of 3 or 4 weeks, okay? The total three, in a matter of 3 or 4 weeks, went from 500 billion to 1.1 trillion, testing the prior all-time high. That's 3 or 4 weeks, right? Now, we have 4 months left in the cycle, right? Just about 4 months. All we need to see is something exceeding what we saw for 3 or 4 weeks in December. We're already starting at a significantly higher point than 500 billion. We're up at 700 billion. And if we see the same level of that move, we see a move of 500 billion, just like we saw that time. Yes, we're going to be exceeding what we saw. Let me get the measuring tool actually here. We're going to be exceeding what we saw if we see a 500 billion move in December. We're going to be far exceeding it most likely, because that, accession beyond that point would actually be entailing a breakout from the 2021 all-time high resistance, where we got rejected from back here in December. Right, so that's a major resistance level, and hence it's a major trigger point for a move potentially back to the top of this channel. If we reach the top of this channel by October, that would be 1.7 trillion. And so the altcoin market will hypothetically, from this point, increase about 115%. That is such, I want you to not take that super seriously. Such a vague analysis based on so many speculations. But the point is, yes, if we do see any sort of altcoin season, it is highly likely that we will exceed what we saw in December. The altcoin market will rise on a general scale beyond that. Now, that doesn't mean that every single coin you have will exceed what it went to in December, because the altcoin market is saturated. It's bigger than what it was in December, and the money's going to be going to different places. But on a generalized scale, taking into account the entire altcoin market's valuation, which is what the total 3 chart does, yes, we should very well exceed that level quite significantly. And that's even when taking into account an underperformance of altcoins in this cycle, which we do expect, and it is happening. The gain from the prior cycle from 2017, 2018, the top there to the top in 2021 was 219%. If we went to the top of this channel to 1.7 trillion, the gain would only be 47%. That is a very, very reasonable diminishing return. It's not a overly optimistic thing to estimate at all. But again, it's so speculative, you can't be sure on exactly where it will go. We just know that in a very short period of time, it can do a lot, just like it did in December. We just need that trigger. How closely do you think Bitcoin follows the M2, and what are your general thoughts regarding this? M2 is the money supply, essentially. And the specific chart he's talking about is the global money supply. And so obviously, for example, during quantitative easing on a global scale, that's going to rise dramatically, like COVID 2020, 2021. And during tightening, that's going to mostly flatline or rise more slowly. Now, as everyone here probably knows, when money is created, it flows into assets first, because money is created through debt, right? Money is not printed for no reason. It's printed when there is a demand for debt, and debt is implying that assets are being invested in, right? When you take out a mortgage, you're taking out debt, and that debt is going right into the housing market. That's why when money is printed, like in 2020, assets just skyrocket. And so there obviously is a correlation between the M2, which is the global money supply. It depends on what country you're talking about, but the M2 global, specifically the global M2, of course, is going to be a correlation between global asset prices. And we can see that. We can just overlay the global M2, which is a chart made by some specific person on TradingView. It's not actually publicly accessible, but you can just use the US M2 and you get a pretty good idea anyway. And you see it here in blue, and you see it in relation to Bitcoin and what Bitcoin's done. And you can see there's a clear correlation, right? Bitcoin bull markets are influenced heavily by the M2. Bitcoin bear markets are influenced heavily by the M2. And this is a relatively direct correlation. It's not like every single move the M2 make, Bitcoin needs to make. And that's very clearly portrayed here in 2021 when Bitcoin dropped 50%. The M2 continued rising or did not much. But again, there's delays here. So, the money being printed doesn't just immediately raise prices or decrease prices. And so some people have speculated, and this is probably answering the bottom question here. This guy, I really can't pronounce his name. I think it's Raul. He's pretty popular in the space. Here's him right here. You've probably seen him before. I watched this entire video and heard what he had to say about it. But essentially, people have speculated that there's a trend forming where basically there's a 3-month delay between what happens on the M2 and what happens on Bitcoin. And there's a theory that Bitcoin is following the M2 with a 3-month delay. So the M2 rises, 3 months later, Bitcoin rise. Okay, M2 goes down or goes sideways, 3 months later, Bitcoin does the same. And that's vaguely true, and it does make sense. But it's not the be-all, end-all. And I don't focus on it for a few reasons. One of the reasons is it's already implied that within the 4-year cycle, okay? The 4-year cycle, the whole trend, the whole thing with the M2 correlated to Bitcoin and predicting Bitcoin price action is already implied within the 4-year cycle, because the 4-year cycle is a byproduct of this occurring. So looking at the M2 and relying on the M2, which has speculative, by the way, effects on Bitcoin, in the sense that sometimes it's 3 months later Bitcoin does something, sometimes Bitcoin fronts runs the M2, sometimes it's 6 months later. It's not entirely clear what the exact time frame is, and so reacting to your asset portfolio based purely on something like this is going to leave you in positions where for months on end you could be wrong, or you could be holding when you shouldn't be holding, or selling when you shouldn't be selling, or buying when you shouldn't be buying. It's an unpredictable time delay, and furthermore, the very thing you would be reacting to, which is the M2, is something that is already implied within the 4-year cycle, which we already know is more precise than the M2. Instead of having a 3-month delay, that could be a 6-month delay, that could be a 3-month front run, what you have is an exact date range trend telling you pretty much exactly when things are going to happen that is already connected to the M2. Now, there is an argument here, which I'm sure you want me to get into, which is basically because rates are being held higher for longer, the M2 is not increasing as quickly as it should be doing, and that is influencing how the M2 is correlated to Bitcoin, and hence potentially could delay the cycle. Now, that could happen. Sure, I'm not opposed to that happening, but I want to see evidence of it first, right? Because what I do know, as a concrete fact, is that interest rates historically have had no effect on Bitcoin. Right? They may have affected the M2, and the M2 affects Bitcoin in an uncertain time frame way. But this is the interest rate chart here, and what you can see is that global M2 was rising even when interest rates were rising in 2018. So acting like this whole thing is tied to interest rates is illogical, because that's completely ignoring one of your 2 big data points, right? So that's why I trust the cycle. There's just too many nuances here. And there's already the implied truth, which is that the cycle is all of this. When you're talking about the cycle, and this is why I stress it all the time, when you're talking about the 4-year cycle, you're not just talking about a date range trend, you're talking about all of this, right? You're talking about global liquidity. You're talking about presidential cycles. You're talking about trends that have existed in the S&P 500 for decades, right? And it gives you an exact kind of time frame, or mostly exact time frame, which, the M2 chart can't provide on its own. Now, if Bitcoin is going to break the date range trend of this cycle this time, awesome. That's very easy for us to interpret as it occurs. All we need to see is Bitcoin extend beyond October and still be in parabolic breakouts. I'm not suggesting that we just sell blindly in October. I will only sell if a breakdown occurs within that time period, right? If there's no breakdown and the cycle is destined to extend beyond October, awesome, I'll keep holding. There will be no effect on me whatsoever, even as someone who trusts the cycle the more than I trust this kind of analysis. So overall, this is just highlighting, yes, the cycle is bigger than just a date range trend. There are things like global liquidity and M2 that we need to be looking at, but there's also a nuance there, which is we shouldn't be solely relying on that as evidence, because it's not as exact as people assume that it is, right? As I said, that 2018, 2017 time period where the M2 rose, Bitcoin rose, S&P rose, but interest rates rose as well, right? So who are we to say what's going to happen with the M2 in relation to interest rates this time? Obviously, we have a good idea, but it's not as exact as something like a concrete cycle, which we can always abandon if the data doesn't line up with it, with no risk to our portfolio whatsoever. In the Bitcoin dominance chart, from the bottom to the top in 2018 to 2020, it lasted about 1,080 days. If we do the same from September 2022 to August 2025, which is 1,085 days, that would suggest the altcoin season would begin in August 2025, just off the rip here. I don't really see any concrete evidence to support this. This is simply one data point that you've extracted from history, and I don't think one data point is enough to really say anything. 2 data points is, you're getting there, especially with the context, but mathematically 3 data points is the gold standard. But again, with 2 data points, you're getting there, because you can, for example, create a trend like I've done here with the 320 days altcoin season, which we saw on 2 occasions, which, yeah, it's only 2 data points, but the underlying mechanisms for which those 2 data points came about make it so unlikely to be a coincidence that it is a trend. Whereas you've just taken kind of a very simplistic look. You said from the 2022 bottom to August would be 1,080 days. That's what it was last time. Therefore, could it be 1,080 days this time? It's like there's nothing really behind that. Now, what I can say is this. If we do end up dropping in August, and we do develop a pattern in which, okay, there was 1,080 days here, and there was 1,080 days here, in the next cycle, we can think, okay, maybe it's going to take 1,080 days from the bottom to the top of Bitcoin dominance. But this cycle, we just don't have the clarity. Thank you so much for watching, guys. I really hope you enjoyed. If you did, please help me out. Leave a like, comment, and subscribe. And also, a lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.